Welcome to Allan Reports TV. I'm your host, Allan Labucan from allanberryreports.com. Today we have a new installment of our weekly wrap-up show. This is our last show of 2010. It's been a good year. In fact, these shows are kind of a new project for us during the year, and we used to do most of our reporting via our email newsletter, and that we would put out usually in the past about once every 6 weeks or so, and these reports were putting out 2 to 3 times a week, and this has really given us an opportunity to, I believe, do the most reporting we've ever done on the commodities and resource stocks, and we're really excited about the shows. We're building up a really nice audience for the shows. We thank you very much for that, all you viewers. We're getting a bunch of new viewers. I wanted to let the new viewers know, if you're looking for a specific past show, the best thing to do is to, first of all, to find the show. If this is the particular show on our main page is the show you're looking for, right below me on the screen, you'll see a little update section. In that update section, we have a little details about the show that's in the viewer in the video player above, and so we always put the current show up on the main page, and then all of our past shows are in the. We started a new section up on our called shows, and all of the past shows are in there, including the dates of the shows, the overview of the show, what companies were talked about in the show, and a link to how to go and watch the show. And so that's the best way to navigate for our new viewers. And as I said, it's been a really rewarding year, putting out a lot of shows about commodities and resource stocks. We're going to talk about them shortly here, but just wanted to mention that for thanks to our current viewers and our new viewers that are coming on. So before we get started, we always start out with the show with our thank yous. We use youtube.com and ustream.tv to produce and broadcast our shows. We have 2 channels. We have a YouTube channel and a Ustream channel. That's where all of our past shows are located as well. It's the best way to go to find our shows, though, is just to go to the show section. Then we have those linked up to our YouTube and Ustream channels for the past shows. Those are 2 great websites for anybody who's interested in doing online shows, and we highly recommend them. If you're watching this show on our website, you'll notice to the left and right of me that we have banner sponsors. Those banner sponsors are really important in us being able to bring these shows to you. And if you want to do some homework on those companies, you just click on their banner. That'll take you to their websites where there's plenty of information and news about the companies and what they're working on. And of course, to you, the viewers, you give us a platform and an audience to talk to about commodities and resource stocks, so we thank you very much for tuning into the shows. All right, so we'll get on to our show today, and I've just got to move some stuff around on the computer screen here. So I get the first topic. I got a few topics I want to talk about today. The first one I wanted to talk about is I watch a lot of media. 2 of my favorite channels to watch regarding the stock markets and what's going on economically is CNBC in the States and BNN up here in Canada. In fact, I got to say that the folks over at BNN are kind of one of the reasons why I started this show. A few years ago, I was invited to be a guest on BNN, and they wanted me to come in and talk about my reports. And I had never done any public speaking until then, and was rather nervous, if you might say. After the first time, and subsequently I've been on there probably close to 20 times since, I really became more comfortable in front of a camera and that's part of the reason why I started these shows. I'd like to be on TV more often. They don't call me up enough, and so I find that I enjoy doing these kind of conversations and talking like this in front of a camera. And so the folks over at BNN, I'll say a thank you to you guys too, because you kind of helped me to be comfortable in front of a camera, gave me a chance to speak about commodities and resource stocks, and that's got a lot to do with why we have this show now on Allan Berry Reports TV. So, but when I watch CNBC a lot, I often find that the commentators on CNBC are not as well as knowledgeable about commodities and resource stocks as they are on BNN up here in Canada. In Canada, it's, we know that commodity production and is a really critically important part to our economy, and so we're pretty knowledgeable about it up here in Canada. On the other hand, in the States, not so much. And I often hear the commentators talking about, when gold or copper or silver or oil go up dramatically, one of the first things I hear is they say that these are bubbles. And sometimes when I hear that, I kind of wonder if they really understand one, the fundamentals of what's going on with these commodities, and secondly, what a real bubble is. You look at the tech stocks in the late 1990s or the housing market in the 2000s in the States, and those were real bubbles. They were built up on a lot of hot air and a lot of leverage, debt, and when they unwound very rapidly. But one of the key things about any bubble throughout the history of economics is that there's wide participation amongst a bunch of people. During the 1990s, there was a wave of people talking about, well, I own this tech stock or that tech stock, or there was, what was really in vogue back then was day trading. There was a lot of people getting into day trading at that time, and you couldn't really go very far without hearing about how you got to get into tech stocks. You got to get into tech stocks, and that didn't turn out too well. Then the same thing happened with the real estate bubble. You had all these people talking about, we're getting into real estate. You would hear people talking about putting next to nothing down, owning more than multiple properties as investments, highly leveraged investments. And when that unwound, but one of the two key things that caused those bubbles were leverage and wide participation. That's the crux of a bubble. And then you look at gold, silver, copper, oil, and other commodities right now. And if you, first of all, there's not nearly as much leverage happening to invest in those commodities. And secondly, the participation is quite narrow. In the States, you can go and hold on a moment here. Got to turn this down. In the States, you can go and you ask the average investor, or in other industrial countries in Europe and whatnot, you ask those investors if they're invested in any of those commodities, and the participation is very, very low, so I think that on the participation side, we're not looking at a bubble. But secondly, I think a lot of these people who are making comments on CNBC about bubbles in gold, silver, copper, oil, and other commodities don't really understand the fundamentals of those commodities. During the 1980s and 1990s, when everybody was chasing after the next tech stock to get excited about, there was not enough money going into exploration to find new discoveries, new deposits of commodities, and then bring those deposits into production. And this long-term period of underinvesting has significantly weakened the supply chains of many commodities. You look at these commodities, and in a general sense, they're going after lower and lower grades. They're having to go into riskier and riskier countries, and these things are continuing to have the supply chains very weakened. And then you add on top of that the emerging economies are aggressively growing, and they're needing a great, ever increasing amounts of these commodities, and they're putting a lot of pressure on the supply chains, and that, in a nutshell, is why commodities have been doing so well for a long time and are continuing to do so well. And so the key difference between the bubbles in tech stocks in the late 1990s or real estate compared to commodities and resource stocks is the level of leverage plus the participation. In the tech stocks and in the real estate, you had high leverage and wide participation. In commodities, you have narrow participation and not as much leverage, and strong, realistic fundamentals, not the next .com that started in someone's basement becoming a multi-billion-dollar market-valued company. These companies that are in the resource sector are producing commodities that are needed in order to have economic growth in the developed and in the emerging economies. So that's the big difference that I see. I often think that this bubble talk is nonsense uttered by people that don't really understand the fundamentals of supply and demand, or bubbles for that matter. Bubbles are built on leverage, excitement, and wide participation. We're not seeing those in the commodity space and in resource stocks, so that's why I think it's nonsense. And the reasons that I stated regarding long-term supply and demand fundamentals are why those commodities have been performing so well, and I think will continue to perform so well. If you look at the past decade, the safest place for investors to have their money has been in commodities and resource stocks. We've seen the same thing happen in 2011. And really, to a large degree, the fundamentals haven't changed, and in fact, I really believe that they're actually getting worse. We keep on going. Like I said earlier, the deposits that are being found in as lower grades and in harder places to work. That is, and then you've got the long-term underinvestment. So you've got the long-term underinvestment and the reality of finding these deposits in harder, lower grades and harder to find places. And then you look at the emerging economies, and these things don't jive. I actually believe that there's a possibility that we could have some severe supply shortages in some critical commodities in the years to come. And so this chatter about bubbles in commodities, I think, is really out to lunch. And basically, I think that during the 2000s, the best place to have your money was in commodities and resource stocks. Same thing in 2011, and I think you're going to see the same thing going forward. Another really bullish sign is seasonality. During the last couple weeks of December and actually back in the summertime, in the last couple weeks of August, generally there's less investors around, so it doesn't matter what stocks you're looking at, there's less activity in those stocks, and resource stocks often fall into this category. In a general sense, they're not covered by the big brokerage house analysts throughout the world, and the participation, going back to what I was talking about earlier, is much smaller, more narrow than other asset classes. And so during the last couple weeks of December, oftentimes you would see a pretty good dip in resource stocks. And that was often a time where, Santa Claus was giving away some really good bargains in the resource stocks. This year was much different. This year, there was hardly any weakness. In fact, there was a lot of relative strength. I think that that's a bullish sign going forward for commodities and resource stocks. I'm not going to make a lot of predictions yet because, we're working on our Outlook 2011 report that we put out each year. We're going to be putting out our Outlook 2011 in the next couple weeks, and we're going to be making some of our picks or calls for the year ahead. So we're not going to get into that too much, but definitely this relative strength coming into the end of the year is a very bullish sign for commodities and resource stocks. And so those are some of the things I wanted to talk about today. Next week, one of the shows during the week, we'll do our annual year in review for 2010. Back in January of 2010, made some. We had our Outlook 2010 report, and in that one we talked about. Let's see here. I'll just give you a quick overview of what we talked about. We talked about stock markets, where we felt the Dow Jones Industrial Average, S&P 500, Toronto Stock Exchange, the TSX Venture Exchange were going to be going. We talked about commodities, gold, oil, copper, uranium. We talked about bonds, US dollar. What else did we talk about in there? And gold, silver, copper, oil, uranium. We talked about bonds, interest rates, the US dollar, and we'll do a review of those calls sometime next week. And then in the first couple weeks of January, we'll do our Outlook 2011. So again, the best way to find out about all the reports that we're doing and shows and our website and what we're up to is to be a subscriber to our email updates. If you look above me, you'll see a subscribe button. Fill out that information, and we'll send you updates whenever we're doing shows or public speaking, TV interviews or reports, or any changes to our website. So that's a close on our week in review. But before closing the show, we'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any efforts you make to let your friends know about our shows, our website, our reports, is greatly appreciated. We also really appreciate you taking the time to watch these shows. We know that everybody is very busy these days, and we strive to produce a show that saves you time and, most importantly, brings you helpful, high-quality information. As I said, we'll have our probably the first show of next week. We'll do our chat regarding our review of 2010, and then we'll do some more shows on in the news shows next week. So again, subscribing is the best way to keep up on what's going on with our shows. And we hope you can join us for future shows. You can find all of our work on our website at allanberryreports.com. So that's a wrap on our year's 2010 shows. We hope that everybody has a safe New Year's celebration, and also that 2011 brings you much joy and prosperity. We'll see you soon. Have a great day.